Hey everyone, welcome to the 10th video of this next multibagger series. So I started this series to discuss fundamentally strong companies from mid-cap and small-cap space that can potentially grow multifold times in the next 5 to 10 years. And so far, I have covered 9 stocks where I am very bullish for long-term wealth creation. And all these 9 stocks are part of my own portfolio. So I thought of doing a quick review of these stocks and sharing my own returns. This is my attempt to show my complete transparency and honesty. And previously also I mentioned that I don't simply create video for the sake of content creation. My goal is to identify and discuss fundamentally strong companies that can help everyone in creating wealth. Although I clearly mentioned that my videos are only for educational purpose and I want you to take the ideas from my video and then do your own research before investing your money. Okay, before I proceed further, one last thing. I might not be 100% right in picking the next multibaggers. In fact, I'm sure I'll end up making a few mistakes because there is no investor who has not made mistakes. But as long as I'm able to identify 5-6 right stocks out of 10, I think it would be good enough to create a lot of wealth. So with this, let's get started with today's video. And in case you are new to this series, I would strongly recommend watching my previous videos from this series. Alright, let's get started. So the first video I did in this series was of KPIT technology. If you have been following my channel, you would know that I am more inclined towards technology stocks because I strongly feel that the future is digital. And the best part is that India is a global leader in IT sector. Now KPIT is not a traditional IT company. It's a pure play electric vehicle software company. And future cars would be essentially software on wheels. 21st century is all about electric vehicle and this is just the beginning. Moreover, the future cars would be autonomous and shared. In short, the usage of software in the car would continue to increase and would continue to fuel the growth of KPIT. Today, every major car OEM is investing heavily on technology because it is not an option anymore. They know that if they don't invest in technology, they'll become obsolete. And that is the reason I invested in KPIT technology. The only concern with KPIT has been the valuation. It always commanded a premium valuation. But the way KPIT is growing, it deserves a premium. Personally, I managed to invest in KPIT at an average price of 399 and today KPIT is trading near around 1100 rupee. So I'm sitting on nearly 170% profit. By the way, KPIT has declared its Q1 results and in spite of challenging global environment, KPIT has continued to outperform with sales up 70% year on year and profits are up 57%. Management has continued to stick with their previous FY24 guidance of 27 to 30% revenue growth in constant currency and margins are around 19 to 20%. So KPIT is the first stock from my list and currently it commands a market cap of around 30,000 crore with a PE of 68. Although from valuation perspective it is on higher side, but looking at the bigger picture for next 5 to 10 years, KPIT can potentially grow multifold times. So for me, it's an SIP grade stock. Now second stock in my next multibagger series is also a technology company. It's Affle India. Again, the logic to pick Affle India was simple. Today we live in the era of targeted marketing over digital platform. So unlike your newspaper or TV where the target audience is not clear, corporates can use digital marketing to show targeted ad to their audience. For instance, a trading platform company would show its ad to someone who is really interested in trading. And that is only possible with digital marketing. And that's where Affle India is in a sweet spot with its own patented proprietary algorithm that shows relevant mobile ad to the target audience. And Affle India has unique business model of cost per conversion. So it only charges on actual conversion. And considering the fact that more and more consumers are preferring to use smartphones, every other sector like your e-commerce, OTT, then fintech, online gaming, healthcare, telecom, education is increasing its digital marketing spend. And this trend would continue to grow and benefit Affle India. Now, if Affle India share price has been consolidating since last 18 months after exceptional growth during COVID period. The reason for correction in Affle India share is due to slowdown from developed market. But Affle India is focusing on emerging markets like your India, Indonesia, Malaysia, Vietnam, Thailand, where the growth potential is much higher. So personally, I am bullish on Affle India and averaged it at 912 and currently it is trading at around 1060. So showing me around 16% profit. At current level, Affle commands a market cap of around 14,000 crore at a PE of 57. Now in the near future, there can be some more headwinds, but this is one company where I'm bullish for next 5 to 10 years. Interestingly, third stock in my list is also a pure play technology company. It's MapMyIndia, also known as CE Infosystem. Basically, MapMyIndia offers digital map services as well as IoT solution. It's mainly into B2B, that is business to business, and B2G, that is business to government, with clients including the likes of ISRO, Niti Aayog, then PhonePe, Flipkart, Yulu, HDFC Bank, then Airtel, Hyundai, MG Motor, and so on. But now MapMyIndia is also tapping the B2C segment with its Mappl app. One of the cool features of Mappl is, unlike Google Map where it always confusing over flyovers, Mappl clearly suggests if there's a flyover and whether you should take left or right. Now my logic for picking MapMyIndia in this series was again simple. The usage of mobile phone would continue to increase, and digital map is one of the most important functionality. Be it your food delivery, e-commerce, logistic, everyone needs digital map. In fact, Indian government is also using digital map for land surveying, surveillance, planning, and so on. And MapMyIndia is also a leading player in IoT with products like location-based analytics, video telematics, infotainment, and connected car solution. Today, MapMyIndia commands an operating margin of more than 40% that itself speaks about its leadership in the market. In terms of share price, MapMyIndia launched its IPO in December 21 at around 1000 rupee, and in no time, it zoomed to levels of around 1800. However, it corrected for the next 14 to 15 months to levels of below 1000 rupee, but now it is trading near levels of 1500. I managed to accumulate it at an average price of around 1188 and currently showing me 25% profit. At current level, MapMyIndia commands a market cap of around 8000 crore rupee with a PE ratio of 73. Although the valuations are steeper, but company is growing at a very good rate and has a very bright future. So I'm planning to hold this company for next few years, provided there is no change in fundamental, and any correction can be utilized as an opportunity to accumulate it. Then fourth stock is Dixon Technology. So whether you use a Samsung or LG TV or OnePlus or MI phone or Philips or Havells LED light or even Godrej washing machine, there are high chances that it is manufactured by Dixon, as it is a leader in consumer electronics manufacturing in India. Dixon has also forayed into wearable device in partnership with Boat. Now, electronics manufacturing is a sunrise sector in India, and there are three key reasons. First is global MNCs reducing dependency from China and building alternative supply chain. Second is huge government support for domestic manufacturer with PLI schemes and Atmanirbhar Bharat Abhiyan. And third is huge domestic demand from 140 crore people in India. So personally, I am very bullish on Dixon Technology. Although its share price has already zoomed a lot in the last 5 years, but last time when Dixon crashed after Q4 result, I managed to hold my nerve and added Dixon, and my average buying is now at 2830 rupee. So today Dixon is trading at around 4000 rupee and I'm sitting on around 42% profit. At current levels, Dixon commands a market cap of around 24,000 crore and a PE ratio of 86. Now again, valuations are expensive. So I don't expect a lot of upside in near term, but I wish to hold Dixon for long term due to immense growth potential in consumer electronics segment and Dixon leadership in India in this sector. Now, fifth stock that I've covered in this series is MTAR. In that video, I clearly explained what is green hydrogen and MTAR role in green hydrogen sector along with defense, clean energy, space and nuclear program. With clients including the likes of ISRO, DRDO, HAL, Nuclear Power Corporation of India, Bloom Energy, MTAR has built a strong moat in its segment, and considering the huge focus of Indian government on domestic defense and clean energy segment, MTAR is one of the best pick to play on defense and clean energy theme in India. By the way, I'm not sure how many of you are aware, but the recent Chandrayaan-3 has also got multiple critical components from MTAR, including propulsion Vikas engine, then cryonic engine, then liquid propulsion and so on. Then MTAR is also going to launch its own small satellite with payload of 500 kg in space. Company's leadership has guided for around 45 to 50% revenue growth in FY24. I strongly believe that MTAR has potential to grow multiple times in the next few years. I managed to accumulate MTAR at levels of around 1660 and currently it is trading at levels of around 2100. So giving me around 26% return. Today MTAR commands a market cap of around 6,500 crore and a PE ratio of 63. Now valuations are certainly on higher side, but considering the growth prospect of MTAR, it will command a premium. By the way, all these investments I have done in last 1 to 2 years. So currently the returns are not that high, but I'm sure 3 to 5 years down the line, the returns would be amazing. Now, sixth stock in this list is IDFC First. This is one company that I've been discussing for more than 2 years now. IDFC First had a roller coaster ride in last 2 years where its share price zoomed from COVID lows of 18 rupee and touched a peak of 70, and then over the next 1 year it corrected more than 50% to lows of 30. However, from there IDFC First has recovered exceptionally to current levels of 84. I managed to average IDFC First at 46 rupee and currently showing me a profit of 81%. Today, IDFC First commands a market cap of around 55,000 crore rupees and a price to book of 2.5. Its Q1 results are due tomorrow on 29 July and I am expecting another good quarter. Now, my logic to invest in IDFC First was also very clear. I mentioned it in the past also that I always look at the banker who runs the bank, because in banking sector it's all about leadership and management. But it's very tempting to grow at faster rate by giving loans, but it's very important to have a robust credit underwriting process to ensure that the asset quality is top notch. And IDFC First under the leadership of Mr. Vaidyanathan has navigated all the past burden of its bad loan that it inherited from its parent IDFC Limited. And bank has a clear focus on retail banking. Now, banks are the backbone of the country. If Indian economy is to grow, banks would play a crucial role. And today, people aspire to have their own car, their own house, and all the facilities that would require loan. Then investment space in India is growing big time that would again benefit banking sector. Moreover, there are still millions of people in rural India who don't have access to credit facility. So growth in banking sector is imminent and well-managed bank with strong leadership are bound to grow. Mr. Vaidyanathan has clearly mentioned that IDFC First loan book can grow at 25% CAGR rate in the years to come. So I am confident on IDFC First Bank to grow much higher from current levels in the next 3 to 5 years. Now, seventh stock in this series is Gokuldas Export. This company got my attention when I saw huge FIs and DIs buying from almost all prestigious fund houses. And when I dig deep, I found that Gokuldas Export is going through an amazing transformation under the leadership of Mr. Sivaramakrishna Ganpati. Basically, Gokuldas is an apparel exporter mainly in US, where its clients include the likes of Gap, H&M, Messi, then Adidas, Puma, Nike, then Diesel, Guess, then Superdry, Forever 21, Walmart, and the list goes on. And the key trigger for its growth is China Plus One, where global companies are building alternative supply chain in textile segment, and India has emerged as a strong alternative. Moreover, after a sharp jump in cotton prices, they have corrected significantly, so that would again benefit the company. And after a long slowdown, US retailers are also expecting to refill their inventories in the coming next 1 or 2 quarters. So there are multiple triggers for growth in Gokuldas. I invested it at a levels of around 394 and currently it is trading at levels of around 530, giving me around 35% return. Even today at current levels, Gokuldas has a market cap of around 3,200 crore and a price to earning of just 19. So there can be even more growth potential in the coming quarters and years. Now, eighth stock that I've covered is Avance Financials. This pick is from affordable housing finance sector where I see immense growth potential in mid to low income housing finance category. In this segment, I also like home first finance. Now in this segment, one of the most important parameter is lower cost of borrowing so that companies can pass on the loan to end consumer at lowest cost. And Avance Financials has one of the lowest cost of borrowing in the segment. Now Avance Financial share price zoomed exponentially after its IPO listing, but it became expensive, so it has seen profit booking. On top of that, there is a transition in leadership where Mr. Sachinder Binder promoted to MD and CEO. This leadership transition has also resulted in even further correction. As a result, Avance share price has tanked more than 50%, and that created a good opportunity to accumulate it. I managed to add Avance as an average of around 1,395 and currently it is trading at around 1,600, so giving me around 15% return. At current level, Avance commands a market cap of around 12,500 crore and a price to book of 3.9. And I see immense growth potential in it in coming 3 to 5 years. Now, ninth stock that I've recently added in this list is Raj Industries. This is based on the theme of sustainability, and Raj is a leader in Indian biofuel segment where Indian government has set up an audacious target of 20% ethanol blending with petrol by 2025. So that would fuel the growth for Raj Industries. Moreover, it has also forayed into your second generation ethanol production and SAF, that is sustainable aviation fuel, that not only has demand in India but even in US and Europe. In addition, Raj is also innovating in engineering division with critical process equipment, wastewater treatment and so on. Today, Praj has more than 1,000 customers across 100 plus countries, including players like IOCL, BPCL, HPCL, then Triveni Engineering, then Balrampur Chini, Heineken, Deepak Fertilizer, SAB Miller, Bajaj Hindustan, UB Group, Biocon, Procter & Gamble, Ranbaxy, Lupin, BASF, and so on. My average price in Praj is at around 395 rupee and currently it is trading at around 415. So there's not much profit as the share price has been consolidating for a long time. At current levels, it commands a market cap of around 7,600 crore and a price to earning of 29. That looks reasonable. Company has also posted good Q1 numbers, so I'm bullish on Praj for next 3 to 5 years. So that's the update of 9 stocks from my own portfolio that I've covered in my next multibagger series. As mentioned earlier, I've been transparent and honest with my videos. Then there's one more name that should be a part of the list that I've covered multiple times in the past, and that is Newgen Software, where my average buying is around 414 and currently I'm sitting on 100% profits. In case you want to know my complete portfolio and my investment strategy, you can explore my weekly video series on my website. Link is in the description. Now currently market is a bit heated, but I'm very optimistic on India's growth prospect for next 5 to 10 years. Those who will invest in fundamentally strong companies and keep patience will certainly create a good wealth. Now tell me in the comments, do you hold any stock from this list in your portfolio? And which other stocks do you think can potentially generate multi-bagger returns in the next 3 to 5 years? Let me know your comments. I'll see you next video. Till then, take care.